The situation with gold contracts happening around the world right now doesn't look too good. According to the numbers I've managed to find, whether it's the United States buying up gold from Switzerland, so much so that other countries can barely get any, or major global banks moving massive amounts of gold, it's like there's a war going on. Each country is scrambling to get as much physical gold as possible into their own hands. You can find supporting information about this new crisis that might arise, with gold possibly being the root cause, at this QR code. Or if you just hit subscribe, it would really encourage me and my team a lot. Thank you. Just one click is enough. Now, the strange thing about gold is that a lot of unusual things are happening all at once. For example, JP.Morgan, the bank with the largest market cap in the world, they've moved a huge amount of gold, up to 3 million troy ounces, or about $4 billion. And it's not just JP.Morgan either. If you look at this chart from Bloomberg, you'll see that all the major banks in the world have been moving gold. The total reported value is $8 billion. According to Bloomberg, the possible reason these big banks are moving gold could be because are they trying to avoid taxes? Or maybe they're looking to make a profit through arbitrage. But in reality, no bank has come out to give a direct interview about this. However, if we dig a little deeper into the numbers, even the price for lending gold, meaning the rate for lending gold from banks that hold gold deposits, like GLD, has shot up dramatically. If you look at this graph, you'll see that the price for lending physical gold, actual tangible gold, has gotten extremely expensive lately. So I went to check the charts from Swiss Gold, and I found that there's actually something unusual going on. Let's get right to it. This chart here, this is the gold export chart from Swiss Gold. Swiss Gold is the largest gold trading hub in the world. This data is from January and February 2025. Take a look. The last blue bar here represents the United States. The US alone bought 193.4 tons of gold from Swiss Gold. So what? America bought 193 tons of gold. But what's next? Well, look at this. It's the only blue bar standing out by itself. No other country bought any at all, completely flat. That's extremely unusual. How is it possible that in just the month of January, in 2025, Swiss Gold sold almost 200 tons of gold to the United States alone? Other countries, which are also known for trying to stockpile gold, could only buy this much. If you want to see just how unusual this is, let's rewind and take a look back, all the way to 2023. You'll see that normally the graph doesn't look like this at all, not even close. The country that bought the most gold in January 2023 was Turkey, 57 tons, and next were China and Hong Kong, each buying 25 tons. As for the United States, at the very bottom, they only bought 0.9 tons. In February 2023, the biggest buyer was China, jumping up to 59 tons. After that, Hong Kong and India increased their purchases. After February 2023, for the most part, China was the top buyer. Just like we saw, China really swept up a lot of gold into their reserves, right? It's about 20 to 50 tons per month. After that, the buying and selling alternates. Some months, one country buys a lot, another buys less, mainly between China, India, Saudi Arabia, the UAE, Turkey, and so on. Then, coming into 2024, in the first half of the year, we can see that China bought the most gold. 6 months in a row, China was the #1 buyer from January to June. But another thing we started to notice in 2024 is that, here it is. England has started buying a lot of gold because a crisis began to emerge in July. In 2024, the UK's gold purchases suddenly jumped to 24.6 tons. By September, England bought 20.6 tons of gold. But what I also want you to notice is that little bar right next to the UK, that's the United States. America, which normally doesn't buy that much gold, suddenly started buying gold. The US began by purchasing 6.2 tons, but it wasn't really a big deal, just 6.2 tons. But do you notice something? The usual group that used to buy a lot of gold, they're starting to buy less, or maybe they're able to buy less. There's a difference between buying less and being able to buy less. If they're buying less, it means they decided on their own to buy less. If they're able to buy less, it means they were denied or not allowed to buy. Let's use the formula for October, the end of 2024. The UK bought more gold, 31.5 tons. The United States also bought more, but it still wasn't a huge amount. The US bought 9.2 tons. Let's move to the right. Now, let's look at December 2024. The country that's almost always bought the least gold, the United States, which hardly ever buys any at all. Then suddenly, in December 2024, the United States bought as much as 64.5 tons of gold. Remember how China used to buy a lot? They would buy somewhere between 20 and 50 tons, sometimes 67 or 10 tons, but that's just a little. And if you look again, in December 2024, hardly any other countries bought gold either. Then, moving on to January 2nd, 2025, you'll see that the United States was the only country that bought gold from Switch Gold, 100 tons. 3.4 tons. That made the global gold supply completely dry up. No one else could buy gold. Look at that. Even China, the United States' #1 rival, could only buy 0.2 tons of gold from Swiss Gold. When world governments are scrambling for physical gold like this, it's no wonder why gold prices have skyrocketed so much. Financial institutions see gold prices as being on an upward trend in 2025, and they expect this uptrend to continue in the long term. Citigroup predicts that gold prices will reach $3,000 per ounce within 3 months from the start of 2025. Goldman Sachs forecasts that gold prices in 2025 will end up at $3,100 per ounce. Investing Harvest also predicts that gold prices will end up at $3,265 per ounce within 2025 itself, then rise to $3,085 per ounce in 2026, which is next year, and will reach $5,155 per ounce in 5 years, by 2030. As for JP Morgan, they predict that within 2025, gold prices will end up at no less than $3,019 per ounce. It'll go up to $5,000 per ounce in 2030. As you can see, the price of gold is on the rise. Gold is already expensive, and the forecast is that it will get even more expensive. Some people might see this as an opportunity to buy gold. Maybe that's true. But if you look at whether there are fundamental factors in the world that could really drive gold prices up that much, the answer is yes. Gold prices only go up when the whole world is in a state of fear. So what are the things that make it not so scary right now when the whole world are facing trade wars and even real wars? Even when they try to talk things out, the talks never seem to end. Plus, there's a president of one country who keeps raising tariffs and putting up trade barriers. On top of that, countries are stockpiling nuclear weapons left and right. That's why governments around the world are scrambling to accumulate gold like this. The more fear there is, the worse the situation gets, and that just pushes gold prices even higher. And the result of this gold rush is that gold prices will climb even higher. And debt is really the key here. It's because they're all scrambling for gold. They're fighting over gold. The kind of gold you can actually hold in your hand, physical gold. What they're fighting over is actual, physical, tangible gold. Not derivatives, not gold contracts, not paper gold, and not gold funds, because those are an entirely separate and distinct category of financial asset from physical gold. And these gold contracts could even be the underlying catalyst and primary source of the next global economic crisis. According to the Epoch Times, they published a report stating exactly the following: gold derivatives may become the epicenter of the next financial crisis. Paper gold contracts, or futures contracts for gold, could potentially become the very center of a major worldwide financial meltdown. That's because in uncertain times like these, when more and more people want to secure and take possession of physical gold, this is exactly the risk with gold contracts, because with paper gold contracts, okay, the institutions might claim, oh, we have 100% gold backing. But when they say really, what proof do we have that it's actually true? Who can guarantee whether it's real or not? There might be actual gold backing it, or maybe not. Or maybe the same gold is being used to back multiple contracts at once. All of that is possible, because gold as a safe haven asset, or as a safe haven that gives value, has never lost its value. For the past 5,000 years, it's been physical gold you can actually touch. But with paper gold, there's no one who can truly guarantee 100% that there's gold backing those contracts. No one can guarantee that the gold backing those contracts is actually the same gold, or if it's being used to back multiple contracts at the same time. But since gold is something valuable, right? People pay money to buy gold. The gold I buy with my money should be my gold. We can't just split ownership like that. And in a situation where people really want physical gold that they can actually hold, it could cause chaos. People might take their gold contracts or the paper gold they've bought and try to exchange them for real physical gold. So then we just have to wait and see if the truth will come out or not. One piece of information I found, which isn't official by the way, it's from a YouTube channel called Gold and Silver. They said that after doing the math, only about 7% of the gold contracts are actually backed by real gold. That means if people bring in their gold contracts to exchange them for real gold and the amount exceeds 7%, a crisis could happen right away. And another thing we need to talk about is that the fact the United States is buying up so much gold is not a good sign at all. Is this a signal of a currency crisis? Why? Because the United States is the country that told the whole world that having $1 in your hand is like being in heaven. It's security. It's wealth. If everyone holds on to it, it means you're rich, you're secure, because $1 is a safe asset. But now the United States itself is buying gold. The US is hoarding gold in its own reserves. The question is, wait, does that mean the dollar isn't safe anymore? Why does America want so much gold? This is what's driving gold prices even higher. And let me emphasize again, we're talking about physical gold here. That's why every country is scrambling to grab as much gold as they can, turning it into a gold hoarding war to stock up their own reserves. And this is pushing gold prices even higher. And let me say this with all sincerity. We're talking about physical, tangible gold here.